Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of BTC, taking a look at what's been going on with Bitcoin and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's jump right down into this video though. So here we have Bitcoin paired up with USDT. We're using the Bitget spot exchange for our data source, and this is the 1 hour time frame. This particular chart is used for smart money concepts, tracking big money coming in and out of the space. And as such, we have a good view over the market structure, whether we are in a bullish structure, whether we're in a bearish structure, and of course any fair value gaps that are left behind as well, which for the most part there's a significant amount of these that have been left behind. Now this is using the smart money concepts by 𝗕𝗘𝗪𝗔𝗥𝗘. This particular indicator is good, but it doesn't always mark up the fair value gaps. Sometimes it forgets or just misses some altogether, well, it's important that you know how to draw those out as well, but yeah, more on that in time. So here we can see that we've got 1, 2, 3, 4, 5, 6, 7, 8 fair value gaps on our 1 hour time frame, stacked up from this low area down here of $25,000. In fact, there's probably a lot more much deeper down in the price chart, as you can kind of see here. There's 1, 2, 3, 4, and 5. It's coming down to $20,000, and I imagine there's a few more all the way down here, even this one down here at $15,000 as well. Okay, now when it comes to fair value gaps, you do have a high tendency to wanting to get filled out. They can take some time. Okay, it can take a year, it could take 2 years before you go and fill the gaps out, but more often than not, you do actually end up going down and filling those gaps. So whether you choose to kind of believe that fair value gaps have any kind of meaning or not, you'd same with CME gaps. They are what they are. They are there, and it's important that we understand what drives them. So let's jump on over into Bitget, and if we jump on over into our spot trading pairs for Bitcoin USDT. This is going to be the same chart as we've got on TradingView, but this time the TradingView chart is built into Bitget, and we have the ability to have our order books over here as well as our ability to place orders and so forth. Now this of course is the spot trading pair for Bitcoin and USDT, and you can see that our drawings are on here as well. This is on the 1 hour time frame, but if we take this to a daily time frame, those purple boxes will make a little bit more sense because they are actually fair value gaps on the daily time frame, as you can see right in here. Okay, fair value gaps are created from imbalances in the order books. So essentially these ones here with price going upwards is an indication that large orders came in and there wasn't enough sellers at the price that the orders were placed. So for example, an order placed at $27,000 wasn't able to be completed until $28,259, and this gap as such was left behind. Okay, now when you leave these gaps behind and there's this imbalance in the order books, you don't typically find that price wants to continue pushing up because people are not normally placing buy orders at more expensive prices. If they wanted to pay 27k, they're not all of a sudden paying 30k. They don't want to do that, not necessarily anyway, at least not the logical approach to it. So the imbalance in the order books would basically start to balance out, and price will come back down and put liquidity where liquidity was not. Essentially, these fair value gaps show pockets of illiquidity within the price action. Okay, so price likes to come back down and fill them out. So when we see fair value gaps, we can understand that we have a market structure and we have fair value gaps. We can think that at some point we're likely to fill out those fair value gaps. Okay, no real time horizon to it, but essentially that's kind of the concept here. Now obviously this is Bitget's exchange, and you can see you have a TradingView built directly into it, and you can obviously adjust everything here and draw onto the TradingView charts. All your analysis is saved here as well, so you can save yourself having to have a TradingView account and a Bitget account. So if you are looking for a new exchange, maybe you're a little bit concerned over Coinbase and Binance, Kraken, we've seen things like FTX and Voyager and all that kind of stuff. Maybe you're looking for a new exchange, why not check out Bitget? The affiliate link is in the description down below. It is my go-to platform for leverage trading. I use all my leverage trading done through Bitget, and about 90 to 95% of all my spot trading is also done through Bitget at the moment. So if you are looking for a new exchange, why not check it out? Affiliate link is in the description below. Let's jump back down to the charts because there are some interesting things going on. So here we have the 1 hour time frame, this time outside of smart money concepts. And you can see that we were trying to target out this low range between 29,609 to 29,869. And of course, we were having the the lower lows and the lower highs, which had that tendency to have a breakout. We can see that here. So on the 26th, we saw this low point. We started to gravitate our way out yesterday. We can see that we were testing the upper area and we were looking to either pull back down, which we didn't actually do. What happened here was we had this break to the upside, and you can see that our stochastic RSI corrected down as we had this break. Now we're tested this trend line. Let's go ahead and move our arrow. Okay, so we tested the downward here, so we're moving down into lower highs, right? We're hitting this resistance as we go down into lower highs. We then broke out, and then we've tested those lows as support. So what was previously resistance is now turning into support. We can also see that we corrected our stochastic RSI not only as we continue to push up here, but as we start to move on down, as we find ourselves in a nice area of consolidation. This is potentially now a chance for another break to the upside. So let's go ahead and check where we sit with this, right? So if we're thinking we have to have a 3-wave corrective pattern, are we done? Well, not necessarily fully finished, but we're almost there if we haven't done so already. Let's go ahead and sense check this. Okay, so if we grab our fibs, for our fibs onto here, we bounced up to this little level right there. We should be testing this trend line one more time, in theory, but our minimum expectations have already been met. And what I mean by minimum expectations would be we've come down to at least 30,383, this line here. We can see that we are finding that this is a strong area of support. We're not able to close below it, so chances are, we've kind of met those, well, we have met those minimum expectations. Now, we are finding resistance on the 50 EMA just here, so it's still possible that we come down and we test that trend line one last time to complete the 3-wave structure on a one-to-one basis, and we do something like this. Okay, this is actually then puts us in a really strong position anyway, because the next move is, as I said, to the upside, and the upside move looks like we are going to be taking this as a 3-wave pattern. Okay, and we're going to take this to this low side. It will give us a conservative target of about 31,334. Okay, and that can go up as high as 31,594. Okay, we can see it right inside there. Okay, that then becomes a 3-wave pattern right in here, like so. Okay, and then all in all, we end up with this really cool structure where we can start to see a bit of a break to the upside. Now, the eagle-eyed viewers out there might start thinking about different kind of patterns, such as head and shoulders. And if I find a head and shoulder pattern, here we go, we could maybe argue that there's an inverted head and shoulder pattern potentially going on, which would be something to this effect right inside here. And of course, as we break that neckline, you would be getting that push to the upside. Okay, so you can see a head and shoulder pattern. I don't like those because essentially all they're doing is mimicking the wave counts anyway. But when you start seeing your corrections here, so for example, you have 3-wave corrections here, and you start to see 3-wave corrections going up. Essentially, it's the same thing, but whatever's easier for people to understand. Elliott waves can be quite complicated, but I think it actually makes a lot more sense than you're doing something with a really crazy name like a dragon pattern or a head and shoulder pattern, right? Call it whatever you want. Essentially, it's just a bunch of waves strung together. But for the most part, we can see that in here, and we have this break to the upside. Now, from a momentum point of view, we've got the momentum on the 1 hour time frame for that move to the upside. We have the momentum. We got some momentum on the 4 hour. I think we probably have to come down a little bit anyway, so that could hopefully be in a strong position, but we've got plenty of momentum on the 8 hour time frame as well. Now, as we start moving up the other time frames, 12 hours interesting, the 16 hours interesting, the 20 hours interesting, and the daily is overbought, right? This means that we are likely to see some smaller time breaks to the upside before we have some deeper corrections later. Okay, so it's not all positive, because we do have to kind of take into consideration the macro landscape, which would be that we are in a bit of a bearish situation on the daily time frame and the monthly time frame, for example. But for the most part, it's not terrible overall. And we can still see a 31,861 to 32,335 as a potential 3-wave pattern in here as well. Again, would not fall in line with the 5th wave movement. So again, we'll have to think of that slightly differently potentially, but for the most part, we can see it right in there, everything that's been kind of going on. Now, it's possible that maybe the 5th wave truncated here, and we're now just, in some kind of corrective pattern before we break on down and all that kind of stuff. But for the most part, we still have, in my opinion, a potential break to the upside into some more local highs. And yeah, there's some interesting numbers that will come out of this, I think, in due course. Now, jumping to the daily time frame, you can see that we're talking about this potential bullish setup a few days ago. I forget exactly when. I do way too many videos to know exactly when I talk about these things these days. But for the most part, we were having the lower highs, the lower lows, and we've seen the break to the upside. We're seeing consolidation right now, but there's still more room to the upside, in my opinion. But what we don't want to do is trick ourselves into thinking that there's something more positive here. We have ourselves some problem overall, where we have higher highs and higher lows on this scale here, with stochastic RSIs, as you can see on the monthly, back to the overbought range, dailies overbought. This is a recipe for a big break to the downside at some point, where all those fair value gaps will, in my opinion, get filled out again. So we're looking for that. Looking forward to seeing a nice healthy correction. When will it happen? It's really hard to say. We're really kind of waiting to see how the economy is going to react, what the Fed do. Are they going to continue with a pause? Are they going to increase interest rates, or are they going to pivot? If they pivot, then we're going to break to the downside, okay? And we'll see how that kind of goes. Until they do that, we might find ourselves in a temporary movement to the upside. $34,000 to $35,000 is the daily CME. So again, we'll be looking at maybe trying to grab that before we see reversal. So 35K is still on the radar, something to still be considering. I'm going to leave the video right there though, guys. If you have found it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.